You're watching news headlines on mining.com. I'm Devin Murrigan. Rio Tinto and Glencore are keeping details under wraps after confirming talks on a potential merger that would create the world's largest mining company. One option under consideration is spinning off coal assets into a separate company to be listed on the Australian Stock Exchange. Glencore's coal business would make up about 8% of a combined group's $45.6 billion in EBITDA and could be worth tens of billions of dollars. Its trading arm, accounting for roughly 9% of earnings, is another key complication. Analysts say alternatives include a pre-merger coal spin-off by Glencore or a narrower Rio bid focused on copper assets. US President Donald Trump has paused on tariffs on rare earths, lithium and other critical minerals, and instead ordered officials to source supplies from allied trading partners. Now, the move sidesteps duties that could disrupt the U.S. economy, while the Supreme Court weighs the legality of Trump's broader tariff strategy. The White House says the U.S. remains too dependent on foreign minerals, especially China, creating a national security vulnerability. Trade officials have been told to negotiate price floors and import adjustments with partners, echoing proposals discussed at this week's G7 meetings. Now, if talks fail, Trump says he may revisit tariffs or set minimum import prices to protect U.S. supply chains. Copper has blasted to a fresh all-time high above $13,300 a ton, extending a powerful start to the year. The metal is riding a mix of booming demand from AI and clean energy sectors and lingering concerns over tight global supply. Copper surged more than 40% last year and is already up about 6% just 2 weeks into 2026. Tin also hit a record as funds pile into metals tied to computing, even though physical tightness hasn't yet emerged. Now, analysts say the broader base metals index is now on course to break its highest level in more than 3 years. The Democratic Republic of Congo is sending Washington a list of mining projects open to U.S. investment as the Trump administration moves to loosen China's grip on critical minerals. Mines Minister Louis Watem says the list will guide commercial talks, stressing Congo isn't offering assets on preferential terms. The move follows a December deal giving U.S. firms priority access to Congo's copper, cobalt, lithium and tantalum. Well, that's essential for EVs, defense systems and electronics. Chinese companies currently control most of Congo's output after years of Western hesitation over conflict and corruption risks. Kinshasa hopes an influx of U.S. capital will rebalance the sector and support a broader U.S.-brokered peace plan in the region. Mining mergers and acquisitions reached about $30 billion in the first 9 months of 2025, with nearly 75% of deals focused on Latin America. A McKinsey-backed report says Africa and Central Asia hold most of the world's critical minerals, but attract the least investment. The mismatch is raising supply risks as demand for copper, lithium, and rare earths accelerates. McKinsey estimates $5 trillion will be needed by 2035 to meet future demand. Analysts say faster permitting and new financing models will be key to unlocking new supply. And finally, Taylor Swift's engagement ring has sparked more interest in mined diamonds than years of industry marketing, and that's according to analysts. The sector says it's been in deep slump, hit by weak demand and the rise of lab-grown stones that now make up more than half of the U.S. engagement rings. Miners such as De Beers in Botswana have cut production and jobs as prices fall and inventories pile up. Taylor Swift's antique cut natural diamond has triggered renewed attention for rare heritage stones that offer scarcity and story rather than low cost. Dealers say it's unlikely to save the industry, but it's restored cultural relevance at a moment the sector badly needs it. And that's where we leave your news headlines on mining.com for now.